Okay. Good afternoon, everyone. Welcome to Potter's Pizza and the Startup Community. And this is Venture Call's Startup Community Meeting, isn't it? Yes, okay. And this is our monthly meeting. You get to eat and listen. And so I am just privileged to get to introduce you. Well, first of all, let me tell you, I know most of you, my name is Karen Light, and a couple of you I'm meeting for the second time. And so welcome. I am privileged to introduce to you Paul, and we are going to practice his last name together, okay? He gets this a lot. Schnittman, okay? No one mispronounce his name. Got that? He gets called many, many things, I guarantee you. So Paul is the owner of Plan Ahead, Inc., and has much business experience and a wonderful talk for all of us today. And so let's welcome Paul Schnittman.
Thank you. Okay, we have two parts to our business, and I'm going to only talk about one. Money management is our main part of our business, but I developed a system we now have trademarked called Plan Ahead Spending, and it works. We do it mostly for individuals, but I've used it for years in my business. So the concepts go both ways. It's obviously it can be more complicated in the business setting versus personal, but that's what I'm talking about. Now, as you can tell, I've been doing this for a long, long time, and I've seen all kinds of situations. And when we first got into this in 1992 is when I moved here, and somebody thought I was a financial consultant or a financial planner. And a dentist was brought to me that was in a total mess. And at that time, I was young, and I thought everybody handled finances like I did. And I learned that that's not the case. And so what I'm going to teach you are some things to consider that you may have never thought of before. You know, most people nowadays, the younger generation, even some of us old folks are starting to get into this, but you know, in the old days, if you kept a check register, you looked at your check register to see how much money you had in your bank account. Nowadays, you know, we just look on our phones. Even us old people can do that. You just look at your phone. In fact, Mike told me some guy said every day he wants to know how much does somebody owe him, how much he owes somebody else, and how much do I have in the bank. That's how people operate. What does it look like today? And that's it. They don't. For instance, how many people use an accountant for their taxes? How many people hear from that accountant more than once a tax time? Okay, typical. They're designed to do taxes, and some of them might, this is my experience, this is not meant to be critical, this is what I'm experiencing, what I've seen clients experience. They'll produce the taxes and they'll give you some information about last year versus this year, but few of them will give you ongoing information that you can make decisions off of, especially in business, but this is true in personal. And when they calculate their taxes for next year, the estimates, by the way, anybody got a corporation where you're paying yourself W-2 wages? Okay, but the rest of you then are self-employed. You've got to decide how much to set aside for taxes and make sure. They're going to tell you, that accountant's going to tell you how much you need to set aside so you don't get any estimated tax penalty. That doesn't mean you're not going to owe, if you have a big year, that you're not going to owe a chunk. My whole system is about planning ahead, projecting forward, and we do it 12 months out, at least. Sometimes we go a year and a half, 2 years, depending on. What I've learned is if you can't handle your personal finances well, you for sure are not going to be able to handle your business finances well. I've seen it over and over, and most people really aren't doing a really great job handling their finances. And if you're one of those, you're in the vast majority from what I'm seeing. All you just got to do is learn the tricks to get better. You may be saving money and you've got money in the bank and you think you're doing well, but pretty much most people spend a lot more than their fixed expenses. You could give me your income and I could hit it real close how much your fixed expenses are versus your discretionary expenses. If you're making in the $150,000, $200,000 range, you're pretty much a third of your income is being spent on fixed expenses. 2/3 are being, I'm talking about personally now, discretionary expenses. Okay, and that's a standard. I mean, it's really easy to, the lower the income, the higher the percentage the fixed expenses are, the higher the income, the greater the discretionary expenses are. If you had, this COVID thing's a great example. A lot of businesses took a big hit. And it at least shut it down temporarily. And most people just hope that it's going to get better. It's important to, for me, in my mind, when you take a financial hit, you immediately make an adjustment. Well, you can't make an adjustment if you don't have the ability to project forward what that looks like. Let's say I'm thinking about, or let's say I lose a big client. It's a $30,000 a year client. How much do I have to cut? You know, because I can't expect that I'm going to replace that person necessarily immediately. So how much do I have to cut? How much, depending on how much resources. I've got to be able to project out 12 months and I know exactly. What if I want to hire somebody? I've got to be able to project, can I? You know, think about it. If you've ever hired somebody or bought a piece of equipment or made some significant investment, take out a loan to buy a piece of equipment or make a significant investment in your business, how do you know you can afford that? If you can't project forward, you're going to have a problem. This is a common statement, you need to know where you've been, where you are, and where you're going. That's the projecting forward, but you also have to be able to look at back. If you get your accountants, does anybody get monthly or quarterly reports from their accountant, financials? Okay, if you did, they're giving, or if anybody on Wolfpack, or do you use QuickBooks? Anybody QuickBooks? Okay, if you run your reports, most of the normal reports, you'll see month to date and year to date. Okay? I'm gonna try to do this math in my head. Let's see what happens. Let's say that that your normal revenue is $20,000 a month, and now you're in July, at the end of July, and you've got, so 7 times 20 is 140. I can do that pretty good. So you've averaged $20,000 a month, pretty good, and let's say August is $10,000. If you're looking at your average monthly income, you take 8 months, take that total after 8 months and divide by 8, you're going to get somewhere in the neighborhood of $18,000, something short of $19,000 a month. Still looks pretty good. You were doing $20,000 a month. Your average is $19,000. You're not worried if that's all you're looking at. You're not really concerned. But if you do it month by month, that income just dropped 50%. That's a big hit. So you got to decide, do you do anything with it? If you're using a year-to-date number, you can't do it. If you're doing this in your individual basis, you're just looking at your year-to-date income and think you're doing good, you're missing a problem developing maybe. You know, if you take a big hit like lose a client, that's easy. What if it's just dripping out? You're just slowly going down. Are you going to see it? Not unless I promise you, not unless you're looking at it on a month-to-month basis. So always look back 12 months and always project forward, be able to project forward 12 months if something changed. That's the key point in that deal. So you know where you've been or where you came from, and you know what's happening. You know how much money's in the bank today, but you also need to know how's it look going forward. There's virtually nobody does checkbook registers unless you've got hair like mine. But physical check registers. I know my wife still does, but few people do that. You really can't do much with a register other than reconcile your bank statement. You have to have some kind of software, and it's easy. QuickBooks, Quicken, if in business, if you've got the money, Wolfpack, something like that that gives you the ability to do what I'm talking about. You can't do it from a bank statement. You can try in a spreadsheet. There's probably, I mean, I'm not breaking my arm to pat myself on the back, but I'll bet there's nobody in this room that knows Excel better than me. And I can't even do this efficiently in an Excel spreadsheet. And I write macros and all kinds of formulas that are a gazillion characters long. You still can't do it efficiently. And pay $30 and get Quicken. It'll do it much easier. Okay. The main reason that you're looking backwards is to spot a negative trend. Projecting forward doesn't do that. It just tells you how to decide whether you need to cut or whether you got fat in the plan to make an investment in your business or make an investment personally in something. Buy a car. That's how you can project forward to decide whether you can afford a car. By the time the problem will surface, if your numbers are, at our age, your numbers are reasonably complex, both personally and probably business, but more personally. By the time a problem surfaces that is slowly festering, by the time it surfaces, you're going to be in pretty bad trouble. I've seen it over and over. By the way, this is a little bit of a side, but this is the biggest problem. If you're self-employed and you're supposed to be doing your tax estimates, most people get in trouble because they didn't do their estimates. They think, well, I'll pay that later. Really, you need to pay, well, my opinion, pay the church first and pay your taxes and then pay your bills. Somebody was saying pay yourself first, pay the IRS first, and then yourself, okay? Okay, another thing that we do that's very helpful is compare, especially if you're in a seasonal business, compare this month's income and this year's year-to-date versus the same period last year. And the software programs typically will let you do all those different things. Okay. Let's talk about the projecting the 12 months ahead part. I've mentioned a few of these. Hold on a second. Oh, one of the, early on in this part of our business, banks were referring people to us, and every time they were high-income people borrowing for taxes. So they got to the point where the bank would say, you go talk to Paul, and if he says you can afford the loan, then we'll make the loan to you. This being able to, the only reason they would take my word for it is because I gave them 12 months projection going forward, how they're going to make it happen. That's the advantage of going 12 months ahead or 16 months ahead. Or like in my case, I'm already out for my own stuff to the end of 2021 and been there for several months. So I always want to go way out there for me. And as I said, projecting forward, it helps you spot a declining or increasing net revenues. You know, I'm going to shift, because the rest of these are talking about loans. Let me shift into leveraging. And I've used leverage in my business before. I'm not a big borrower. I'm not that kind. I'm too conservative. Leveraging, I've got a buddy that has used leveraging way beyond I would even consider, even think about. And he has made literally millions of dollars doing it. I've known several guys that have successfully used leveraging. But here's where you get in trouble in a small business. Leveraging is borrowing money. If you borrow money to live on, you're in trouble. If you borrow money for things that don't generate revenue, you're going to get yourself in trouble. A car is a great example. I mean, that's a declining asset. It doesn't generate any revenues. It just costs you money. Borrowing for cars is not, we got in the habit of it back in the 80s or whatever it was when they started loaning money. But that's not a really great idea. Borrow, that thing is don't borrow money if it doesn't generate revenue. So let's go to your business. Or investments. Real estate's a great example. Borrowing for, if you do it right, buy it right and borrow money, your returns on a rent house are significantly greater if you use leverage, borrowing. You just got to make sure you can, if you don't have the rent coming in, you can make that those costs, insurance and taxes and so on. Same way with the business. If you're borrowing let's say you're a reasonably small business, you have no employees, maybe it's just you, and you've got something that some idea, service or product, whatever, that if you hired so-and-so, you could parlay that wage into bigger net revenues after his wage. Good reason to, if the only way you can hire that person is take on leverage, go for it. Just make sure you project forward and make sure you've got the ability to pay that loan. So ideally, you've already got some in savings that can cover you on a weak month. But keep in mind that don't borrow to pay your paycheck. Don't borrow to really pay the overhead. Borrow only for something that will generate you revenue, whether it's an employee, wages, or a machine that would produce a product. Okay, remember, I'm surely you all know this, but if you borrow in a business, the loan interest is deductible, but the principal's not. So you got to pay that principal payment, which hopefully it's not high interest. So that's the majority of the payment. You're paying that with after-tax dollars. You got a deduction whenever you bought the piece of equipment, and maybe that'll help cover some of this, but remember, the principal's not deductible. So don't think about that whole payment as being deductible. And then also, I'm not going to ask the question because few people do this, but you really, this will help you get the loan too, before you borrow money for a business, make sure you have a good business plan that shows why they should lend you that money. It's for your purposes mostly, but the bank will love it. Make sure you have a business plan for how you're going to use that money and only use it for that purpose. Because leveraging is what gets people that come to us, that borrowing money is what gets them in most of their trouble. I've seen people use their credit cards to fund business. Big mistake. I mean, 30% interest isn't worth it. 25% isn't worth it. If the bank won't lend you money, you probably shouldn't be borrowing, is the way I feel about it. Okay, my summary is that, and then I'll let you ask a question. Many small businesses fail because they never took time to have a solid business plan. They had an idea, but they never figured out a roadmap to get them to profitability. You must have a good handle on your finances, and you must be able to project your cash flows well into the future. Borrowing money without a plan can be a death trap for a business, and if you don't have the ability to do these things, then hire someone that can do it for you. But remember, no one cares about your business as much as you do. So when you're hiring somebody, try to obviously hire somebody good, but nobody's going to care about it more than you do. Hopefully. Okay. Anybody? Questions? Yes.
Once questions come, will you repeat the question?
Okay. Yep. Who had one? Yeah.
Okay, just a couple quick comments. I had an old
No, I don't ever get into that for myself. The question is, has there been any projection of how much income will come down with the additional taxes? You know, I can say it. I vote Republican. I always have. I believe in that philosophy. But tax cuts, I don't think the tax cuts do what they say they'll do, because I can afford more taxes. They need to extract it. I'm going to still do the same thing. They need to extract it from those of us that can afford the taxes, because it costs a lot to run this country. Do they run it right? No. And that's our biggest problem with taxes, is they're not spending it right. But you know what? It's kind of like tithing. You know, I give it to the church, I give it to God, and let God figure out how the staff's going to spend it. Same way with this. We unfortunately vote these people in there, and they're not, this is my opinion, they're not handling it right because they can't handle their own finances right. That's really the underlying. If we would put, you ever seen the movie Dave? You know, he gets his 2-bit little accountant in there, and they start cutting stuff and expenses, and so the country's doing better. That's basically what we need. We need a bunch of normal people to go up there and go through the books and figure out where to. It's never going to happen because of politics. But you can also overtax it, obviously. But there's plenty of room. Like, really, did we need? Those of you that benefited from the tax cuts at the beginning of, what was that, 19, right, or whenever he did those taxes, that had been 3 years ago. But did you really, you benefited, did you need the tax cut, or would you still done the same thing? Most people that I know would have survived just the same way. They just got extra money and they spent it on lake houses and stuff. And so if that money would have been used like it was intended to use to generate new jobs, great. But instead, they're investing in equipment that makes it more automated. So that's not a great answer to your question.
One other quick one, I really think the economy's going to contract. And I'm not totally paranoid, because you still got to make your own wage. If the economy starts to contract over the next couple of years, how could that affect the markets? I mean,
Stock markets? Oh, big time. Yeah, I think it's coming. I mean, I'm one of these ones that thinks this economy is not doing it. If the economy was doing as great as those people are saying, I'm going to say Trump's the biggest Trump of it. He's the one that's spouting this out. But a lot of people are saying the economy is doing great. If that were the case, why do we have 10 million or 8 million now people unemployed? Why are interest rates as low as they are? When things are going great, interest rates are supposed to go up. That's just normal. It was normal, but we're artificially keeping rates down. But, you know, if you stop and think about it, that's helping our government, because we can't afford the interest rate. If I've done this. Take the amount we owe, this has been several years, take the amount we owe, assume some interest rate. We can't pay off our debt. There's no way, with the given tax revenues, we can't pay off our debt.
without getting into, 10 to 15% interest rates, was a killer. That's when I got all mine.
Yeah.
So,
That's not normal. You can actually inflate your way out of debt, where inflation goes up, and there's a borderline of it going into hyperinflation. That's not good. But the economics say that you can inflate your way out of debt. I don't see how we're going to pull that off. But back to your point, that if you look at a chart of bond interest rates, the first bond was issued in like 1790, shocked the dog out of me, and the interest rate was 7%. And the chart that I looked at was back when I first moved here, or within a few years. I think it was 1995, 1790 to 1995, and the 93% of the time interest rates are below 7%. So a good target, and prior to 2008, I could buy a 6% taxable bond all day long. and all day long, and a 4% tax-free. Those were my targets, and I could get them all day long. And now that you can't even think about it. It's not even high yield bonds aren't even that high. So the real question is that nobody really focuses on, why are interest rates so low if the economy is doing so good? So if you're in the stock market right now, you better start asking yourself that question. Something's out of kilter here. Interest rates should be much higher. We're at all-time highs. Did you see the market today? It went nuts today. And we're at all-time highs, and yet our interest rates, 30-year government bonds are at 1.74%. No, I think the bond market will get way worse because the credit quality has come way down. The stuff that used to be investment grade, AAA, anything triple B or higher, that's about 6 levels that would be considered investment grades. Many of those have shifted down into what we used to call junk in the old days. Now they're called high yield because it sounds better. But
Finally, I promise, have you ever heard of bonds of Imperial China?
do what?
Have you ever heard of bonds of Imperial China?
Of Imperial China?
Yeah,
No.
that's an old joke. I mean, guess what happened?
Oh. All right, anybody else have questions? I didn't really want to get in the investment side, but really from a business standpoint, you know, if you're in one of those businesses, if you're you own a fly shop, you're doing great right now. If you're selling RVs, if you can pick the right industry at the given time, you know, you've got that magic crystal ball, get after it. But if you're in one of those normal businesses, I mean, make hay while the hay, but it's not going to last forever. I mean, they just came out today, that's why the market spiked, saying that whatever vaccine they got is proving to be 90% effective. And so let's say they come out and they whip this thing and we all start taking COVID shots like we take flu shots, and you rarely get it. Well, then things can turn around, but something's got to give. Either things got to get a lot better than they are now, and all companies doing good instead of just a certain kinds, or if you don't see interest rates going up, something's wrong. Unemployment needs to come down big time. Yeah. A mobile what business?
Mobile service.
Yeah.
We work with railroad.
Yeah.
And we don't have a brick and mortar location at all. And so we're heavily leveraged on like vehicles and
Right.
trailers and to go be able to go out and do that kind of stuff. And you were saying if it doesn't make you money, you shouldn't do it.
But you can't make the money without those trucks and trailers.
It's true. What I get into trouble is how much mileage we put on a vehicle in an average year versus trying to trade it off. We're always upside down.
Well, then you're borrowing too much. You've got to figure out come up with a plan so that you're paying those off before, at least when they are useful life to you, they still have value, but the useful life to you goes away. So if you're borrowing, your period of the loan needs to match how long that vehicle is useful to you or less. Get to where you're paying them off or paying cash for them. That's even better. But you don't for sure. This is personal as well. Don't borrow. If you can't afford a car unless you finance it for 6 months, you can't afford that car. 6 years. If you've got to finance it for 6 years for you to afford it, you're buying the wrong car. You need to buy a Hyundai or something that's cheaper. And no, I got you, but work on it. You come up with a plan to where, let's say you finance them for 8 years, or whatever they finance them for you, 8 years, and you're having to trade them off in 4 years. Start coming up with a plan where some of these, like the new ones, you're only financing them for 4 years. And you slowly move into this. Because one of these days, railroads are a great business to be in because we'll always have railroads. So assuming they don't fire you, but one of these days you're going to get in trouble when you lose some contract. Something's going to happen. Maybe it hadn't happened to you yet, but you would need to assume that it will. Wait, before you leave that, are you incorporated? Okay, do they make you personally sign on the notes? Yeah. Try to get it to where they don't do that on every one of them. No, they'll do it. I've had loans where I'm not personally signed on it, in a corporation. Yeah.
And it's also one of the deals, we've only been in business, we're in our 5th year now.
Well, that's why you're not be able to do that yet. You got to get this before you.
I'm just saying, I give you credit cards, there's certain things that you just don't do. If I hadn't done that, I wouldn't survive long enough to actually get profitable.
Let me make a comment to that. It's not your problem. The general question is basically how do you not take out loans to grow a business? And because I don't have any money, I agree. You say you don't have any money, but the reason you don't have enough money is you spent too much on discretionary things personally, let's say, so that there's not enough money to pay those bills. That's everybody's problem. I could sit down with every one of you, maybe even you, if you're not doing my system just like exactly like mine, and I can cut your spending every time. There's never been a situation where these are people with no problems. They just want to control their spending better, and I can cut their spending. I can take somebody, I got a guy, he had $350,000 owed to the IRS for back taxes when he came to me, and $350,000 in student loans, and he's paying us $1,000 a month just because he won't completely follow the plan, but I was able to reduce their spending way more than they're paying us. The point is, we all, including me, I spend on a lot of discretionary stuff I don't have to. I'm into tools. I'm a money manager, but I love mechanicking. I'd work on my own 10-year-old truck. I love it. I was a heavy equipment mechanic in college. I buy tools like you buy candy or Cokes. And so I spend, if I need to shut down, I've got plenty of places to shut down. And the problem with most people is they get themselves in trouble because they spent on discretionary things and didn't pay attention. That was at the expense of their fixed bills. And then they always say to me, but I don't have any money left to pay that fixed bill. It's because they spent too much on discretionary. It's always after the fact. I can promise you, I can do that to everybody. Go ahead. Yeah. He just said 2020 has been a weird year. Go ahead.
Typically, our business always would slow down in the hot months, July and August. It would slow down to about maybe 40% of what we normally do. This year, that did not happen. It just barreled through, and it didn't slow down until September, which never happens. September, November is generally bumper months for us, but that ain't the way it happens. So it's like everything shifted 3 or 4 months.
It was trying to get that product moving across the country.
Which is really odd. I mean, it's odd, but it's actually even more difficult for us because being in the summer, it's not a huge issue. People want to go on vacation anyway, all these different things that employees, people want to do. So you have less volume, it's a prime opportunity to do that, right? Well, this year it's happening right up against the holidays.
But when you are making hay in the summer, when you normally don't make hay, that's when you put the money in the bank to. That hopefully would have been that your fall would have been the same as it always was. But in this case, you've got this extra to help get you through what is normally a strong season, which now is a weak season. Yeah.
Is I took out one of those PPP loans, specifically because I didn't know what was going to happen. I wanted it there just in case, right?
Right.
I haven't needed it until now. And I'm not, I mean, I've got enough in savings that I think I'll be okay the first of the year. I'm pretty sure I'll be okay the first of the year. My question is
No, don't keep holding on to it. Because you know why? This thing's not over. You know, the whole purpose of that program was to make sure you didn't have, how many people work under you? Okay, they're wanting to make sure you don't lay those people off. If you give it back, okay, well, that's even better. And so the point is, that was intended to be this stimulus to keep this economy rolling. And if you just banked it and you never spent it, even if you spend it, you know, pay it out to yourself and you spend it personally, you still accomplished what they're wanting. They want you to throw that back in the economy. In this case, they want you to keep your 5 people employed. And you said a key thing to me. I've got enough cash to get me through to the end of the year, but what if you need it next year? You're still not sure yet. So you don't spend it until you need it for its purpose, keeping those employees hired. That's what it was for. Yeah, don't feel bad about it, because you're doing what you're the one they were targeting. Small businesses that are, and your guys are the blue collar guys. Yeah. They've got this problem I'm talking about. They're spending more than they're earning. You need to keep them employed or things get really bad. Yeah. Yeah. Wait, before you say that, back to you on the railroad. In this case, they're wanting that your employees' paychecks going, whether they're working or not. So that's the whole, it was so that they would keep spending money in the economy. That's what that program, keep their paycheck going so they can keep spending. Yeah, so don't forget that, because that's what it was for. Don't feel guilty about it. That's what it was for. All right. Yeah, go ahead. Go ahead.
Just a quick note, Wagner told me years ago, you're gonna buy new vehicles, 36 to 42 months, the interest rates are pretty low, but that's the incentive to buy used vehicles. I mean, I'm sure you know.
Yeah.
Has ways of looking behind.
Well, right now, used cars, back to your railroad. Hey, let me tell you one more thing about when to trade. That's not a decision that's the same year to year, and he's bringing it up again on trading vehicles. Right now, used vehicles, especially used trucks, are worth a lot if they're in good shape. They're worth a lot. And I haven't priced the new vehicles, but what I'm seeing is those people are buying new cars, but they're not. Those prices don't seem to be going up so in other words, if you've got a used vehicle right now that's in pretty good shape and you're talking about upgrading, this might be a good time to look at. But don't borrow for it. Just, yeah.
My problem with that is right now, the vehicle I bought in 2016,
Yeah.
to replace it,
Yeah.
equipment, the price is more than double for a new one.
Well, that's what I'm saying. You've got to do a little bit better analysis. But also, don't forget, this, surely, that you get a full write-off. So even if it costs you, the sticker or the drive-out price 40, it's not cost you 40, depending on your tax bracket, it's costing you something less.
Well, I get that. And then the other part of my deal is I'm trying to figure out, because one, it is a write-off, but two, when we get ready to upgrade equipment, because it's went up so much, I'm gonna have to go up on what I charge my customer. And I'm really struggling on trying to figure out what is realistic.
Well, I couldn't help you there. But lots of places are raising their rates. You look at mattress makers. There's been a shortage of mattresses. The only reason I know that, we were buying some mattresses for a house in Pagosa, and they said there's a shortage, yet the prices are up. Why? There's a supply is low and demand is high. And so you might be able to raise your prices, but I doubt it in your business. But I don't know.
Typically, annually, I'll go up $1 to an hour, just
Yeah,
as routine.
yeah.
But
I'm good.
if my projections are right, I think you go up about $20 an hour. And that's, I'm
That's where you're at. Your advisors have to figure that out for you.
Well, my deal with it is that is a lot. Is it gonna, a couple of dollars, my customers don't freak out. But $20 an hour, they might freak out a little bit.
I'll turn it over.